We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to continue on our cycle trading strategy talk in relation to Charles Nenner style thinking. And as I said before, I have no association with Charles, never met him, I only watch the videos on YouTube. Right, so here we have, today we're going to look at gold and Bitcoin quickly. Now, first thing you can see in the price chart, you got two big lumps, two cycle highs. And that can be reflected in the green cycle. Now, that's pretty easy to work out. As you can see, the green cycle is sort of bottoming out about now, and as you can suspect, it's got a bit of a swing up. And that coincides with Mr. Nenner saying we're going to may have a 6-year run up here. 2000 2012, that was a 10-year. 70s to 79, that was 9-year. So to say 6 years is pretty safe. So that's the green line. Now, the red line is a cycle over 2,000 days, and as you can see, it fits quite well with intermediate. Whoops, sorry, vertical line. Yeah, some tops, bottoms. Okay, it fits quite well. And the great big bull market started here, the green, and obviously you peaked there. But as you notice, I want to highlight this point here. See how the red line sort of cycles down but doesn't go very deep, right? Because the price action is a very strong trend. Just scroll that up. That's because obviously price broke out new highs. We had our cycle low about here, okay, and the trend up. We got another high, so the highs here and high here was quite timely. This high here, price action took it higher. Now, to say that again, the red line is peaking about here and have a low there, so I think we're going to get another situation like this where we get some sort of action. This is the global financial crisis where gold fell 20-30%, and as it does so in the beginning of the crisis. We're just finding its feet now. I suspect we're going to have a bit of a wobble down here. We might go to 1400, 1380, something like that. Do range bound price action as people prepare to go higher. Before gold goes higher, it always sells off because people are adjusting their positions. Those are too leveraged with the gold position have to sell because of margin calls, and those that have deep pockets are accumulating and adjusting their positions for a longer markup. A longer markup is coming because this crisis is going to fuel higher prices in gold. We're talking about the corona / recession / debt crisis / pension crisis. It's going to move gold higher because we are seeing the reaction by governments and central banking, and prices actually going higher. So I believe we're going to get a shallow dip in the red line, and it'll reinforce the strength of the green line. That coincides with Mr. Nenner's forecast. Now, it also coincides a slump in the summertime, which is pretty consistent with gold. Now, the blue line down here is the tradable gold cycle. Now, if I go to a close-up, when you work out these cycles, they're just to find where the highs and lows are and whether it's repeating relative to price action. I throw in Wyckoff to see, cause and effect and what have you. But to turn this into tradable data, we use some indicators. I got RTT steps here, and I also have my DPO here, and I have the momentum indicators, and I also have, this is the bigger cycle. So this DPO here with the big swings, that's actually the red line. This DPO up here is the blue line. So we go back to here. That's the blue line, and that's the red line from this previous cycle analysis chart. As you can see here, we're expecting a bit of a slump going into summer. It's gold. I've explained before, we've got a gold, something going on here. How deep it'll go will reflect the expectation of the crisis. See how it went down. There was a real dump. Someone really unloaded there. But unlike gold today, unlike back here, they had a many-year run-up. This run-up's only just started, so not everyone's on board yet. So I believe the plunge in gold will be shallow. We've already had the initial shock. I mean, the stock market, Let's look at the NYSE. It's moved 50% down. The S&P 500, which is weighted to the the most favourite stocks, that's down about 30%. I mean, the margin calls have been blown out. Most of them have been done. So if all the gold margin that had to be sold, it's probably been done by now, because nobody wants to sell gold because they know what's coming. All right. Okay, so after these steps is behaving quite well. So the support there, probably just above whatever the support is, 13136 is GLD. Okay, so we can expect, which confirms Mr. Nenner's, is that summer's going to be a slump in metals, gold, silver, what have you. And as the summer works going into August, September, and going on, it will probably get our rally like this sort of stuff. Just in line with the cycle, I mean, momentum indicators will turn around, and we'll see the red line be shallow like this. Come on. Got to click my mouse properly. Here we go. And we use our Wyckoff. Here's our base, a markup, our tests, and a volume should support it. So that's in line. So that sheds some light onto the Charles Nenner thinking that we're going to have a bit of a slump in summer, but a longer trend comes out, because these cycles, as I've just shown you, support a longer term trend. Okay. So if you're just trading gold for many years, some people just specialise in one or two securities, gold and or gold stocks. Cycles like this would, bring the bank in and make you quite wealthy, of course. Now a quick flash to Bitcoin. Alright, I've got it here somewhere. There it is. And like before gold, we've got our big lumps here. Lump, lump, lump. That's the green line below, the green cycle coming in down there. As you can see, this green cycle has an attraction to rally between now and 2022 somewhere. And the red line is a faster line, and that's supporting another. So the red line and the green line. The purple line is adding the two together with weights. So here's the green, the red line, and here's the weighting 90-10, and then it just draws them down here. I've just combined the line numbers down here. So as you can see here, Bitcoin is bullish, trend going, probably accelerating late in 2020. As we flush out the lows, the Bitcoin's obviously suffering the same margin call stress as the gold and metals are, and once that's done, we'll find out whether gold is whether Bitcoin is digital gold. Now I'd like to point out that the financial crisis relating to debt and pensions and the stock market and all sorts of stuff, and money, of course, it's probably going to bring in some sort of cryptocurrency world to the sci-fi world. The new technology that comes out of this crisis in a couple of years is going to be the boom in internet money, and obviously internet commerce, without going through the banks and credit cards and what have you. So I believe Bitcoin is going to be warming up very much so in the next couple of years as prices see that, investors see that, and we'll have to see what happens. Once again, Mr. Nenner is bullish on Bitcoin for the same reason these cycles are. So price has to be understood. Use your Wyckoff logic on price. You can use cycles to see where the big change in trends are, and you can use GAN for momentum trading. So that's a continuation of cycle strategy. Thanks very much for watching.